This is supposed to be a conversation, okay? So just kind of play with me together. And so let's have some fun. Newspaper is better than a magazine. Seashore is better than a street. Even young children can enjoy it. Birds seldom get too close. Rain, however, soaks in very fast. One needs a lot of room. So what are you getting? How do you feel? You know, what thoughts comes? What feelings? What are you present to? Kite. Newspaper is better than a magazine. Seashore is better than a street. Even young children can enjoy it. Birds seldom get too close. Rain, however, soaks in very fast. One needs lots of room. So the point I want to make is the context is decisive. Without the context, what you are making is basically you are creating your own context when you read it. If you read the financial statements, sometimes as if we were reading these things, you kind of just making up your own things because you kind of get lost and confused in all of the places, right? What are you talking about? But then a good financial report should tell the story, should be all tied together. You have a clear theme of story, and you speak concisely and loud, and people read your financial, they get it. Okay, and that will be very compelling. So really, you want to make your financials as a story. So the way we think about financial management, you always start from the strategic, and these a lot of times also mindset is the context. Okay, we'll talk a bit more. The story, make it clear. And then we have a habit. The habit here in this context, I really want to talk about the proactive. And this proactive is actually even deeper in a bit when we talk about budget. We will talk about that. And then system. Okay, so system, that's where I say where the integrity comes from. So when I say integrity, I'm not talking about morale. I'm talking about in like a system design, okay, in database, we call integrity, which really means it's a workability. Okay, so, a good scenario is like you have the bike wheel. The bike wheel have so many spokes. Every spoke is, tight and there. So your bike will perform to the maximum power, right? You have the things there, it should be there, and then you maintain it. Okay, so it's workability. That's what we're talking about. So there are two aspects in integrity. One is called design integrity. And today, you will see how we design. Okay, that's actually half the battle. And then it's the implementation integrity. And we will talk about some example of how you maintain the implementation integrity. Okay, so that's how we are going to work. So let's have another fun. So I did the budget. We can't afford a dog. So that's one mindset. A lot of times we do that, right? But on the other hand, we can get how much we're constrained. The budget is, you can use the budget as a creation process. Like the budget could be part of the strategic planning. And what I really like is when we're doing strategic planning, we're thinking, this is the vision and this is how the programs lay out, and later on I'll show you some formats. And then we plug the numbers in, and then we go raise money, right? And whether it's raising money or whether it's combination of fee for service plus fundraising, that's how we create the future to fulfill the vision. Now, how important is budget when you try to raise money? So these are some of the foundation people they're talking about. I look at the budget. Over the years, I've learned that narrative can be enriching, but the numbers are stark and straightforward. I want to see that the money is doing the job described in the proposal. Okay, so we want to create the budget, and then later on, we want to have the budget in our QuickBook financial system, and then create a budget to actuals like that. That will be very strong. And then you want to design the budget in a format that tells the story. So I skip around the document in the following way. First, the budget, to see if the request is appropriate and to see the agent's financials. Then the project section, to see what they want to accomplish. Then the border list. Okay, so really, because the budget, it tells so much, so that's why you really want to make it a story. They glance the budget first, if it makes sense. So I often look at the budget and then read the proposal backward. So that's how important the budget is, and the financial information is. So this is an example of the budget. How do you feel when you look at this? This one tells a story. Okay, we have a rehab center, and these are, we have the main cost, we have it's a people, primary staff, and then we are cost conscious. Instead of having full-time counselors and specialists, we just hire them as consultants. And then we have the resident to service, that's also directly tied to our program. And then of course, the overhead, right? So that is much readable. When the funder read this and the versus the previous, right? You can tell it. So it's that decides which pile it goes to. So we will design the way in nonprofit we want to design in 3 segments. One is admin, one is fundraising, and one is program. Okay, and that's required by both the 990 and the auditing reports. And then within the fundraising, you can have different events or different programs of fundraising, and within programs, you probably have different programs. So we have used sub-program. Okay, and then we have these are the accounts here, and this way your chart of account is not going to be very long. So one mistake most nonprofits have is they have admin, and then they have admin, all these salaries and expense, and then they have fundraising, and then they start again, salaries, all of these, and then they have program, and then all of these, and then your chart of accounts become very long, and then it's very confusing when your accountant try to book something, and it's very confusing, and then it's going to be error prone, and then when you read the financials, you get lost, and you blame the accountant, and the accountant like, oh, I tried, right? So this is how you want to design the chart of account. So one of the things you start to think about is, when you do your strategic planning, you list out your programs. So you start thinking from now, before our meeting next time, is to start to thinking of the strategies, how detailed you want to, and this is really depends on how detailed your reporting requirement, and that's internal and external. External, they require you to keep track of at this level, and there's always cost and benefit. The more detail you keep track, the more complex and the more cost it relates when the accountant, the book, they have to think. And then also, if it's too detailed, it's also going to be, like this one, if you report by very detailed level, if this cannot fit in one page, right, it's harder to read. But if it's you needed information, you need it. So you need to think about how detailed you want, and that's based on your external requirement and internal management needs. So I was working for the client, and we separated in some of the things that we separated, and I was intentional to separate it into these programs. So we had a home ownership center, and then our core mission is to promote home ownership, because we believe home ownership is almost a sure way to break the cycle of poverty. So we have different programs. We have a education program, we have a lending program, we have real estate program, we have rehab program, we have rental program, and so I separated them, and then at the end of the day, we look at the rental program. We thought we were making money. We thought it's a good program because the building was free. LA City gave us the building actually, but then I started to allocate the expenses into it, and it's like, whoa, we're losing money. And then I asked the board, hey, what is our mission? Our mission is promote home ownership. Okay, what is this rental to do with home ownership? Not really. We do this rental is because we got this free building. I say, okay, and I want you to look at what's costing us. And then, I ask deeper questions, how's this building? And they say, this is the old building, and it's way overdue for maintenance, and it could have a fire, any day. Like, how do you like it tomorrow, LA time? Hey, a nonprofit as a slumlord and people burned. No, we don't want to hear that. Okay. So if I didn't say anything, they started saying, let's get rid of it, let's sell it. So, that's the number speak. A lot of times you let the number speak. And then, the education, we see it, okay, it's vitally important to our mission, but education does not make money. It's like we were doing it for free. But I say, hey, how about charge $50 for each student? And it's a good thing we charge them, and actually people show up more. And then we say, okay, this one, now we separate. And now we go to foundation and say, hey, this is education, and this is, we need to pay salary for the staff, for the educators. We need to be funded. So people start to pay us for the education part, right? And then the other part, like, okay, the real estate. We look at the real estate, it's like, whoa, real estate. We educate the people, we give them money, and then now it's real estate. And we are using realtors outside. And these money, it's like a lot of money. That's the easy money. It's flowing outside. Why not do it in-house? So we hired a realtor, have a broker license, and now everything is inside. And we pay the agent 50%, and everything else is ours. So that's why we make a lot of money out of that. And same for the rehab. Rehab, we got a line of credit with the HUD, and then these are like, whoa, this is money making. So in this way, we get clear what's money making, what's mission critical, what's losing money, and yet not mission critical, and we get rid of the ones that's losing money, not mission critical, and then we keep the ones that's mission critical, and then if it's losing money, we take it out and go raise money, and then the ones we make money, we just chuckle, keep it keep it in house, to try to make more money, right? So that's how you think when you look at your programs, okay? And really you want to run run as a mission-oriented business. What I mean is, you have to consider both sides, the mission side and then the money side. That's the reality of it. If it's some mission, some program that actually help you to make money, it's a still program, it's not a fundraising, but make you money, right? That's awesome, keep it. And if this is one of the things that is, easy appealing to people, like things like education, we can single them out and then go raise money and have this program level budget. Yeah. And then of course events, you can keep track of the events, whether you are making money or not, or how much you're making. Keep track of the actual expenses. Some grants, they require you to show them the money. Say, okay, I want to know how you're spending money. And some grants, they just require you to report that. And then if you don't use it, they ask you to repay back to them. So we keep track of that as well. Okay. And then later I'll show you how we can do that. So the way how we do that is we really design the chart of account in 3 dimensions. So this is the accounts. Now that's the left side, the natural account, everybody know. And here is the programs. That's the first statement we saw. And then here by funders, okay. And then each of these has, you have the high level and then you have the sub level. So you can always have programs and then you have the sub level programs. And then you have, funders, and then after that you have the sub level grants, grant 1, grant 2, grant 2019, grant 2020, like that. Okay. So when we think about system, first we think, what do I need? So the cube is we are digging behind how we design the chart of account. And these are the product. Once you design the chart of account this way, you can generate reports like this. Your job is really envision what kind of report you want. Okay, so kind of envision this chart of account, this report. Your job is to start to think about this report, okay? And then the next time when we meet one-on-one, we're gonna brainstorm, keep asking questions, and we'll refine it, and then we start what kind of report, how detail you want, and really talk about that. Okay, so basically your job, if you want to take notes, your homework between this week and next time we meet, maybe a week or 2, really think about this level, mostly this level. That's the most important part. And then this level depends on how detailed you want to talk about. And then a little bit later, I will also show you a kind of example, a model that you can reference to, okay? So it's called a unified chart of account, which I will talk a bit later. Okay? So, and then here are your main funders. Start to think about your funders that require you to report to them. Mainly just focus on the funders that require you to submit a report. And then we will keep track of that. Okay. Yeah, so that's the design. So basically your job first is, what do I need? What do I need? And then you think 2 levels. One is what the funders need. And then another level is what I need as the executive. What kind of information I need, okay? And then ideally, later you share this slides presentation to your program managers or developer director, ask them what they need. That's also important. How they want to keep track of their information to manage it effectively. And then really develop the key financial statements. Now the ones that's needed for tax and for audit, that's that's a given. That's something, in compliance you have to. But also there's a room for you to tell your story concisely, loud, and proud. So that's also something you can think about. And then we will look at the actual work that establish solid financial and accounting foundation. That's what basically the chart of account. So when we build it, we build a system from bottom up. So we start with the chart of account. And then that chart of account is used for budget and also for bookkeeping. And if you design it this way, and then you book it this way, right? We train the accountant to book it this way. Then you generate a report as you designed. And then you also can develop actual to budget comparison. This will be a management tool to monitor. And then also when your organization grows, it's a self-management tool, which means instead of having everybody come to you and have you approve for every little expense. So you can also use the budget as a management tool. So when you expand, you want to focus on the strategic decisions, and you want to go out and tell your stories and raise money. You don't want to be bothered by every little detail to approve all the expenses. So budget to actual report serves as a management tool. So your program manager look at their budget and say, okay, I need to go to a conference, and there's $2,000 conference budget I haven't used. They'll just decide, they'll just go, buy the ticket and go, right? So these are ways you can use these tools to automate your management and hold everybody accountable. So that's how we fulfill this entire process. So really in nonprofit, you needed the 990. That's the key, whether you have an audit or not. The 990 is what you use for fundraising, whether it's from foundations or from individuals. And that's also shown on GuideStar as a data collection tool. Now, if you want to have financial statements, if you're serious about raising money, I would spend some money doing an audit. Audit could, about $10,000 usually to start with. But if you're serious about you're actually doing everything, putting everything in integrity, this is money. It's worth it. We're talking about, you spend this money, and now before you were looking for grants for $20,000, $50,000. Now, when you have an audit report, really you want to start to target yourself. $100,000, $500,000, $1 million, really this way. And if you look at this way, the audit financials, it's a money, look at it as an investment. Yeah, so it's just, this is how the game is, So, and then you have organization budget, program budget, budget to actual, and then funder, they want a specific report sometime. And then management the specific reports depends on how detailed you want to look. I mean, I had an example before. So unified chart of account. So it's a standard chart of accounts and a reporting method designed specifically for social organizations. I'm trying to intentionally use the word social organization than nonprofit organization. Nonprofit is more like a not for, but social organization is for, right? So I think it has a different level of energy. And also I want to try to create a culture where we manage social organizations just like managing businesses. That means, you can attract good people, paying good salary, raising good money, all of these. And later I'll also show you there are many ways to raise money, and actually you help the donor, create value for them. It's a win-win situation. It's just a lot of time it's a mindset. It's a leadership. Okay. So the unified chart of account is promote uniformity accounting practice in a social organization sector to assist in translating current financial statements into reporting categories required by Form 990 and the single audit, sometimes the funders requirements, etc. So what do you see? So this is where, we talk about the integrity, right? When a lot of times, one is the design integrity. The design integrity is what we talked, we really need to think through and design it correctly. And then a lot of time is the implementation. A lot of time got to complain like, oh, our accounting, our report is a mess. It's messy. We can't trust our financial reports. And then the program person blamed the accountant, the accountant blamed the program people. So I created something like this. It's a cheat sheet. Okay, why, every time you have an expense or revenue, let's look at it there. Okay, from the program perspective, okay, we know this is an after program, okay, and this is coming from foundation. So for the accounting, we book it to foundation grants, and then we assign the program. And then program, okay, for the accountant, in QuickBooks, it's called a class. And then the funder, okay, who's this funder? Okay, Smith Foundation. So that's the grant. So the grant, so in QuickBooks Online, it's called location, and we can rename it as grant or something. And then in QuickBooks Desktop, it's called a grant. It's called customer or jobs. So that's kind of how you can bridge communication. So these are things, in the past, I just created this as a kind of a stamp when you do bookkeeping. But it's a way of thinking. Nowadays we really don't have any paper, but it's still a good way of thinking to bridge communication between the program managers and the accountants, so that we can maintain. And then also, you define the chart of accounts and reporting rules. So a lot of times when you have a board meeting, people ask, okay, why is this travel so much? And then let's refer to the reporting rules. Okay, travel means what? All of these, it's in there. Then they understand, okay, that makes sense. Okay. And also cost allocation, you also define it. Okay, we have create a list of how much the executive director spend, how much percentage of time spent on fundraising, how much percentage into programs, how much on admin, and then we define it and we allocate it. And then this way, when audit happens, or especially single audit, government audit, they ask you, how do you allocate this? Now, this is thought out process. So they understand that, okay? So I hate the bureaucratic way of say, we have to keep track of the actual hours. That just takes so much time and it's just meaningless, okay? And they give you the money not to spend on tracking time, but on programs. So I usually create just the overall cost allocation ratios, and then we just apply that. And when we generate reports, whether it's quarterly or annually, we allocate on the Excel spreadsheet. That's all. That's the simplest way. And then people, I once had an audit from the federal government and asked me, this cost allocation is not acceptable. We need you to have actual timesheet. And I argued them. I said, no, your intention is to use this money to help us serve the people, not to keep track of the hours. You think about how much time was spent. And this is the method I used. And I've done the process. I interviewed each manager and I created this allocation percentage. The design has integrity, the process has integrity, and then this is how I manage it. The maintenance, the implementation has integrity in there. I'm sticking with it. And then they say, I don't know, I'll go back and ask my supervisor. They went back and asked their supervisor, and then they said, I think your allocation method is wonderful. Can you give me your operation manual? I want to share it to nationwide. That's how it happened. Okay, so sometimes we just have to stick our head. We are operating in reality in the field. We know what's real, and don't bend toward people in Ivy Towers thinking theories. Okay, so then you define the routines. No. So when you say, this is reality, this is a fact, that is so powerful. Yeah, and then you just don't yell, whatever they say, you don't yell. And of course, you don't need to. One of the things, the nonprofit world, there's a misunderstanding is, I give you this money for program you can't use for admin. But reality is, you have to run an organization. You need admin people. So, but it's a fantasy. It's not based on reality. So I just tell them it's reality. That's all. And of course, you can still, try to get more time. As a financial, as the executive director, right? You spend a lot of time on program and a lot of time on admin, a lot of time on fundraising, right? So why do you want to allocate 100% to admin, right? It's up to you to say, right? So, you allocate a larger portion of your salary to program. And so, that stops the argument. Okay. So it's just kind of understand that game process. And then also, one thing I also find in the nonprofit world is a lot of times, the year ended 3 months. It's already 3 months after the year end, and the book still is open. So the way we want to do is develop routines. Every day you should finish this. Weekly you should complete this. Monthly, okay, you should complete this. We consider bank statement, do the bank reconciliation. Within the 5th or the 10th of the next month, and you generate reports, and then at the end of the year, everything's clean. There's nothing hanging in there. So we can generate reports quickly because the timely reports says so much about you. And then you define the roles and responsibility. If you don't have many staff to have a separation of duty, that's fine. You can complement it with review. And that review, you can review the transactional level, or you can just review the financial reports. When I was working at the nonprofit, I create reports. Every week, I send the cash receipts reports to the program managers, because they know, who attended the class and how much money should account. And so it provides a supervision. So this way, it's not like if something is missing, we can always trace and find, okay, where it's missing. I've gone through federal audit, and my experience tells me that it's kind of a political process. And the political process, if you look at this, it's really diplomacy. And if you diplomacy, it's really, I think 2 things. One is the art of language, and another is it's courage, intellectual courage, and also, give and take, like give people compromise and have people feel like they get their way, you give them their way, but also you can, you get your way, so so in the way, in this kind of situation, I would study their instruction. And most of these instructions, even before I read it, I know it's coming from, bureaucracy and academic. It's not grounded in reality, right? But so in this way, I'm not going to completely follow their way. I'm gonna focus on serving the organization. So, so I have ways that will complement them, help them, and then really have them feel like this is a contribution to their, it's like we understand, you get into their world, we fully understand them, and then also it's something we add into them, help them, and then they will be always happy. They will take credit, and I give them credit. This is, you guys created this, you implement this, and now they can actually share with other people. They improve their bureaucratic process. That's my experience. Yeah. But if you totally follow their thing to the T, you're gonna waste so much time. And really, we will, find a solution that will work for you and for them. I always believe if you take a stand, that you will find a solution that works for both parties. You always find a solution, and then you always get into their world first. And it's a human work. I think it's a human work. If they felt that you understood them, now they're open to listen to you. It's always human work. It's always diplomacy. Yeah. So we talk about auditor. So here's the auditor. So right now, traditionally it's a year-end auditor, which is, at the end of the year, the auditor come and review all your financials and then pick samples and ask you to show them evidence, backup. And that's where a lot of time is wasted. And that's why it's very expensive. So, and then also, because remember, the chart of account, we talk about how we strategically plan the chart of account, right? But most organizations, the accountants, they kind of just piecemeal. Whenever they have something, they add something, and then the chart of account is not clean. So you don't have the information that's ready for the 990 and for audit. So they have to kind of almost redo the accounting. It's like go fix them, and that takes a lot of time. So and then also accounting the program, a lot of time is not connected, or there's no tracking of program at all. And then we have to, kind of again retrack them, reallocate them into different programs to generate an audit report where you separate program, admin, and fundraising expenses. So these are all time-consuming problems. So the way we do it is now called proactive auditing. So the way we do it is we charge monthly actually, and so we think the work should be done proactively before you even do the bookkeeping. So if you have a grant, you have a contract, let us read the contract, and then we design with you the chart of account, and then how we book it, we agree on it, and then you book it correctly, okay? And then at the month's end, we will review it, see if it makes sense, and if it's something sticking out, doesn't look right, we'll fix it right away. So at the year end, we know everything is clean. We just use the report without these sampling, all of these things. What's the point of do this sampling, right? We already know it's correct. We reviewed it every month. So that's our approach called proactive auditing. And we found that it fits for nonprofit organizations so well because one is we are kind of providing a technical assistance ongoingly. Whenever they have a question, they ask us. Two is it really eliminates the year-end sampling process. So it eliminates most of the time-consuming cost, which does not create any value anyway. So that's how we do it. Yeah. So with that, $10,000 and you can have a full audit completely, and it serves the purpose. And the bottom line, your book is the integrity, and the quality of your financials is much better than the traditional year-end auditing. Yeah. Yeah. So that's we check the books monthly basically. If you have questions, you ask. So yeah, so really we focus on the system and the process. And also it's an ongoing improvement of the process and system. The first question in terms of auditing, the ideal way, what we want is actually do it from the beginning of the year and throughout the year. And then at the end of the year, like right after the year, we will start to finish the report, so in a month or two, we can generate the report. So that's the ideal way. But the first audit, usually clients come to us, say, February or March after the year, and then we are auditing their previous year, right? Usually it's something like that, and that's fine. So the first year is more like traditional auditing, but the first year we also take it to like, okay, usually the clients understand that they come to us because they like the proactive auditing process. So they understand it. So the first year we kind of do our best and perform some basic procedures and make sure the audit is in compliance. But also in a way that, okay, this is first year, we're gonna just get it started, and then over the time we're gonna help you to improve all the processes and systems. So that's how it works for first year audit. So this grant is not designed for audit. This design is more to work with you and put the systems in good place. So more of a consulting, supporting you to lay the good foundations. I think that's the intention of this grant. So this is the first meeting. We kind of just get to the same page of the thinking, and then you go back and you start to think about your strategic plan, and then think about how you want the report to look like, what kind of programs you want to keep track, at what level, and then who the funders you needed to give reports, like that. That's the first step. And then the next meeting, you will individually book a meeting on my website, and then we'll discuss what you come up, and then we try to finalize, and then we'll look at then probably another meeting if we need to really look at your chart of account, look at your book. We can take a look at it and suggest ways to improve. And if you have an accountant, connect with me, and I'll work with them, help you to improve that process. So that's the way. And then if you want to engage us ongoingly after that, for auditing, for the proactive auditing, then you talk to me, and we will sign the engagement letter. That's outside of the grant. That's something you have to pay. Yeah. So what do you see? Do you see the arrow in this logo? So my point is, human beings, we only see what we want to see. We only see what we created in language first. So the way we create is through vision, through writing down your vision, and then through talking about it, and then it becomes reality. And then it manifests in reality. And then that's what leadership is. Leadership is really creating the future. Creating the future, and then eventually you see it, everybody see it, and then it becomes reality. So one thing you can help to donate to donors is help them create value. Okay, so I work with a lot of high net worth individuals, entrepreneurs, and yes, they are charity inclined. They want to help the world. On the other hand, a lot of times they donate is because it helps them save tax. And also, it also because it actually creates a better value for themselves, not only just save tax, but also create a better, um, even more money for their family, even more money for family while also create a legacy. So one thing I do is just educate donors. So one of the things, if you want us to do, it's something I enjoy. We really develop a donor base, and then we can do seminars like that. We can educate them. One thing you can do easily, hey, have a donor advised fund, and then you can get the deductions right away. And I usually advise them to donate money, uh, donate appreciated stocks. This way, you do not have to pay capital gain tax. And on top of that, you get the deduction of the, of the charitable contribution at the face value, at the market value of the donated stocks, and that will help them to save a lot of tax, and then they kind of create their family foundation, and then they may not designate you as a charity. They may not give you the money the first year, but if you are the person who sponsored this, right, invited this, and then educate this, when they want to give money, when the next time you approach to them, tell them your need and your great work, it's more likely they will donate money to you, right? So I think it's all about creating relationships and nurturing relationships by thinking for what they need. So here is another powerful tool, charitable remainder trust, where they can avoid the capital gain tax, and then also have an income for themselves. Then after that, it goes to the charity. The remainder goes to the charity, and then I can a lot of time educate them. Hey, the income can also be other people. So it's also an estate planning to avoid estate tax. You can pass on the income to your children. And then what I like most is you use life insurance. Part of the income goes to life insurance trust. And then you leave a large estate, and that money a lot of time is much bigger than the original investment. So that is very, very compelling to people. And then a lot of time I actually show them numbers in chart, so people see it vividly. So they really love this kind of approach. And this is indeed a win-win-win situation. It's a win for the person, it's a win for the family, it's a win for the charity as well. Yeah. That's like I can show them the chart with the life insurance, how you without life insurance and how with life insurance is a huge leverage, and so so these are things I can share them with them, and then how the life insurance works, and then the thing I share with them is a life premium financing, and a lot of the high net worth individuals, they qualify, and that way they only pay the interest, for the premium. So this is a further leverage. So people really love that kind of way. And then also share with them, a lot of times they have property and they 1031 at the end. They can pass on to their children with a step up in basis. But if Biden gets rid of the step up basis, hey, instead of giving to your children, you can put into a charitable remainder trust. Just this way, you still avoid the capital gain tax permanently. So these are things that I share with people, and found that it's very, very effective. If you start to really think about nurturing the relationship, that's one area you can nurture. And then, of course, what I want to say is this. They give you the money. You can do so many ways to give some value. You can do a donor appreciation night. Invite them to LA Opera. Have dinner and right socialize. And otherwise, a lot of these people I found that they are very, very hardworking, very thrift entrepreneurs. They wouldn't pamper themselves, but if you do something and pamper them, I think they will appreciate so much. They bring their family. It's fun, and do something sometimes for the major donors. What if we go to Hawaii, have a donor appreciation, and then also seek some advice, right? It's an advisory board, seek advice. All of these are part of the business, part of the operation. So be creative, be innovative, and really thank the donors and give them some value along the way. I think that is how you can run your nonprofit. Yeah, it's all the psychology. Yeah, and it's fun. It's fun to do that too. So just about how we work, we are actually 100% digital. We're completely paperless. That's why I was asking if you have a QuickBook Online. So if you're not, we will help you to switch to QuickBook Online. Today's word, that's the way to go. Completely paperless, completely digital, and completely virtual. That's how we do it. I completely get rid of my office. So completely work out of home and total virtual. Yeah. And all the work, we can just meet on Zoom, and we can just share files in Dropbox. So that's how we can work.